The U.S. Supreme Court strikes down Trump's global tariffs. Here to discuss this historic decision is Anna Rathbun of Grenadilla Advisory. Anna, what is your initial reaction to this decision?
In many ways, from a legal perspective, it was not a surprise, but it was a surprise that it came this late in this particular year during the midterm elections. That was a surprise to me. I don't know what is going to happen in terms of what Mr. Trump is going to do, what White House is going to do with regards to sort of retaliatory to action to that ruling. But it is a very interesting landscape that this is actually coming during the midterm election year.
Economists estimate that some $175 billion in U.S. revenue could be subject to refunds. What does that mean for the U.S. economy? How does that happen?
Yeah, so first of all, it's difficult to assess who lost what. And so I think this is going to be done by the courts and it might last a year or two, even more. So in terms of refunds, companies have to expect a long timeline in getting it back. The other thing about these refunds is that they were being used to get the deficit down. So while it's good for the economy to get the refunds back, it's actually not good for the US deficit profile and the debt profile. So you see US Treasury selling off today due to that reason. I don't know if the Trump administration is going to think of other ways to get the deficit down because that was one of their goals. But this ruling definitely changes the trajectory of the White House's plans.
Trump said that there are other alternatives available to him to pursue tariffs and said he would sign an order to impose an additional 10% global tariff and look into other measures as well. In the long term, short and long term, does this bring even more uncertainty and even more volatility for markets?
Yeah, the 10% global tariffs, because the tariffs that we've seen actually are now illegal. So the 10% global tariffs are just uniform. And it's done under something called Section 122. Now, there are two limitations here. The reason why the number is 10% is because the maximum you can levy under that law is 15. So, we're going with 10. The other thing is it can only last 150 days. So during the press conference, Mr. Trump said about 5 months. That's about 150 days. So between now and 150 days later, the Trump administration has a lot of work to do in either trying to figure out how to work with Congress to pass something that is even more lasting, or working very, very hard with other countries to arrive at a new trade deal. And both of those things are very, very daunting, but that is what they have to do. Now, if they don't do that, then we can expect more volatility 150 days later because we don't know what will happen. I don't know if he can actually extend another 150 days. So if you're actually trying to run a business and you think that you can only do it for 5 months at a time, that is a definition of volatility in the economic environment under which you have to operate. And that is not necessarily good for businesses, especially small businesses. They have less room, less cushion to depend on in running them.
We had data today showing slower than expected economic growth in the fourth quarter and hotter than expected core inflation in December. What are the potential implications now for GDP, for inflation, for Fed policy?
Yeah, so theoretically, tariffs being removed is taxes being removed, and therefore it's better for the economy. The economy is free to operate as it sees fit based on businesses and consumer decisions, right? So we should see, hopefully, some impact on GDP, especially since the consumer side of the data that we got today was not as high as we expected it. So consumers are definitely feeling that pinch. And certainly the PCE, Fed's favorite gauge of inflation, also was not great because it ticked up. So that will actually give a lot of the hawkish members of the Federal Reserve some ammunition to be able to say, hey, we can't continue to lower rates at this time. So there's some interest rate impact to that as well. As for your wallet, I wouldn't expect to see price decreases right now because if you think about the inventory of whatever people are selling, they bought it at high prices, so they're not going to be lowering prices right away. So this is going to be more of an elongated, maybe a slow, gradual downward slope to prices if it occurs at all. And that is if the 10% global tariffs actually expire after 150 days.
Is your phone ringing off the hook today with calls from clients? Does this alter your behavior, your positions, your portfolios in any ways?
Yeah, I think people are feeling a lot of relief. I certainly did. This tariff had been sort of a burden on all of our shoulders, especially because of uncertainty and, of course, higher prices that we're all experiencing. So what I'm hearing from everyone is a sense of relief, and that is a very, very good thing. In terms of investing, I'm not changing positions based on this ruling because frankly, 150 days later, it could change again. And the whole goal of investing for the long term is having a portfolio that can withstand any kind of shocks. So there is no portfolio positioning that will change due to this ruling.